But turning now to the markets, which do continue to be under pressure at this hour, our next guest has the most bullish forecast of the strategists surveyed by Bloomberg on where the S&P 500 will be ending up next year. Here with his outlook on the market and investment strategy, we're joined by Bankim Chadha. He's Chief U.S. Equity Strategist at Deutsche Bank. When you hear an introduction like that on a market day like the one we're having, tell us specifically what you're expecting and why you don't see one-day pressure to extend throughout the year.
Sure. I think, it's very important to keep in mind that basically the very large rally that we've had since the March 9th bottom in equity markets has very much been of a quote-unquote prove-it nature, which is that, if you look at the S&P 500 and you look at earnings seasons, on Q1 pre-announcements and Q1 earnings, which came in a lot better than expected, the market rallied. Between Q1 and Q2, the market was basically range-bound and flat. Q2 earnings season, we went up again. We then began to flatline until we had post-Labor Day, sell-side conferences that saw corporates provide positive guidance. So I remain of the view that we remain in a prove-it mode. So the next catalyst is really Q3 earnings season. And, we see basically the risks once again for the third time in a row to earnings as being on the upside.
Is that just because expectations have been so low, or are you starting to see top-line growth?
It's a seasonally challenged quarter, which makes forecasting a little bit more challenging. But the two or three, key points to keep in mind are that despite much better than expected Q1 earnings and much better than expected Q2 earnings, in the aggregate, the bottom-up consensus of analyst estimates has barely budged. So there's been almost no information taken away from Q1 and Q2 earnings. The next important point to keep in mind is that we are moving from a negative GDP growth environment, whether you measure it in real terms or nominal terms, in the second half to a positive growth environment. And that clearly means the potential for top-line growth is much bigger. And finally, I would note that if you look at margins for companies in the S&P 500, there's clearly been a big bounce in response to cost cutting. But if you break up the margins of domestic and foreign margins, domestic margins remain still extremely low. So after the bounce that we've had in margins over the last 2 quarters, they are at the last cyclical low. And so there's clearly upside for margins. So both on the top line and the bottom line, we believe that the risks are to the upside.
How much attention are you paying to the U.S. dollar these days? A lot of talk about dollar weakness. How are you factoring that into your forecast of 11.25 in the S&P before retreating?
Sure. The cheaper dollar is clearly helping. There's no question about that. The question, really is how much further is the dollar going to go down, and the risk of having a precipitous decline in the dollar. I think there's a clear case for dollar weakness in the near term as the Fed remains on hold. But we have started to get some signals from some of the FOMC members that rate hikes may not be that far away, and that should. The dollar is already cheap is the first and important point to make. And up and until it becomes clear, when the Fed is going to move and how it's going to move,
do you have a forecast
I think the risk.
On that?
Our house forecast is really for a stronger dollar over the medium term. There's clearly a question of timing, and the timing of a bottoming out of the dollar is really, in my view, dependent on as and when the Fed acts and how it acts.
Okay. Very quickly, we are seeing the Swiss franc come under some weakness today. There's speculation, perhaps, that the central bank may be intervening there. Have you had your eye on that story at all today?
No. But
it's not of consequence to you, a report like that?
The Swiss National Bank's been intervening for some time. So, day-to-day movements, yes, but I don't think it's of any new or great significance.
Okay. All right. Well, currency traders are buzzing about it, but not new great significance to you today. That's Bankim Chadha of Deutsche Bank joining us.